Hi, this is PR Sundar. Welcome to this special episode where we are going to talk about Fed dilemma. This is a very important issue. People just for joke they say one time a snake entered into a government office and all the officers instead of chasing the snake away, they were searching for the records. Was there any snake entered office earlier and how was that handled? And because the government servants, they don't think. So they just follow what the previous people have done to be on the safe side. The same way, many times some economists, central bank governors, they just go by the books. Sometimes the problem may be unique, you don't go by the books. Generally what happens when the economy is doing well and economy is overheating. So in order to cool down the economy, the people will raise the interest rate. When the economy is expanding and more people will get jobs and more salary, more money to spend, so that will lead to inflation. To cool down the economy and to cool down the inflation, and central bankers will increase the interest rate. So when they increase the interest rate, what are the things can happen? Number one, people instead of spending, they will be tempted to put the money in bank FD because banks offer better rate of interest. Second thing, when the interest rates are higher, businesses will be a little bit reluctant to borrow to expand the business because of higher interest rate. So this will cool down the businesses as well as the buyer demand, and then so economy will cool down. The same way, when the economic activity is very little and there is no job and the businesses are not doing very well, so what they will do, they will decrease the interest rate so that people know, okay, very little interest rate, why to keep the money in bank, so let us spend it. So the buying demand will go up. The businesses will be able to borrow at a lower rate of interest, so they will be able to do more economic activity. So this is the general rule. But however, what has happened this time, nothing related to economy. Economy was the same. What happened when the coronavirus came and the people were losing their jobs, the government was worried, and most of the time the populist governments, they have to satisfy the general public. They kept on printing the notes and they started giving the money freely. And they introduced a new term called helicopter money. So they just come in the helicopter and throw the money. So this helicopter money, has created a hell lot of problem now. And because of that, the inflation has shot up. And when the inflation has shot up, they just go by the books and they think, raising the interest rate will solve the problem. And of course, it's not going to solve the problem overnight. So it's going to take some time. But these people have no patience, so they started increasing the rate in every Fed meeting. And usually people say when the Fed starts raising the rates, it will not stop until something breaks. Some very nasty thing. And exactly that is what has happened now. Silicon Valley Bank collapse is such a big issue, something like a Lehman Brothers collapse. And same thing, the Lehman Brothers collapse time also, the same thing, So the US government could have bailed out Lehman Brothers collapse. But they did not think that allowing Lehman Brothers collapse will create such a big problem. So the same way this time also, what they said initially, they said that they will not support the Silicon Valley Bank. The Treasury Secretary, Janet Yellen said, the government will not bail out Silicon Valley Bank. But within few hours, they have come out with the idea the Fed will be supplying the money to Silicon Valley Bank, not only Silicon Valley Bank, for all the banks. It was just a upside down decision. Really, they do not know what to do. What is the situation now? During the coronavirus, especially NASDAQ, all the technology related stocks, because those people can work from home. So those stocks have shot up like anything, skyrocketed. So they did not check anything. And now they are falling like anything. Now what is happening? In the process of controlling the inflation, the Fed has a very big dilemma. One, should they allow the market to rise or should they allow the market to crash? If the market rises beyond a limit, so what will happen? The people may be tempted to book the profit in the stock market, and so that money they can spend. So the already inflation is high. If they are spending more, then again that will create a problem. As and when stock market goes up, the Fed is worried about this. Then what happens? They will ask one of their governors to speak something hawkish, something negative, so that the market will be crashing down. And this has happened many times. Again, if the market is falling, crashing down, what will happen? Systemic issue will happen. Many companies will collapse. And that's what exactly happened. Now, this Silicon Valley Bank has collapsed, and there were a few other banks also collapsed. And now they say there are about 15 banks which are on the verge of collapse. So, if the banks collapse, people lose the money, deposits, then many companies collapse. So, that will create a hell lot of a problem. So, as and when that happens, okay, some Fed members, some Fed governors come and speak something dovish, something good. What happens, it seems that the Fed does not want the market to go up, it does not want the market to come down. If the market goes up, inflation will go up. Market comes down, systemic issue, like country will collapse. So, they really do not know how to handle the situation. And this they should have thought before just printing and giving the helicopter money. But now it may be too late. But however, no matter what happens, America will survive. The only thing is whether other markets can survive or not. So that's a big question. So as of now, the banking stocks are falling like anything. So this video is being shot on Wednesday. Today, the Credit Suisse, Switzerland bank, fell more than 25%. And it hit a record low yesterday, and today again closed at the record low. And the European markets are bleeding. So just imagine an European bank falling 20%. They have a wide branch network in US. Clearly, people are just struggling, and they do not want the market to go up. They do not want the market to go down. Market go down, give some dovish comment. Market goes up, give hawkish comment. Right. Just about 10-15 days before, when the markets were down, Atlanta governor gave some dovish opinion, and the market shot up. And because the market shot up within a week, then immediately the Fed chairman, Jerome Powell, came and gave a hawkish comment. Now the markets are falling. So this zigzag, making investment as well as trading very, very difficult. Last year, Nifty moved more than 2000 points many times, but looks like 2023, the same story again. And last year, October and November, Nifty shot up from 16,800 to 18,900. Now, from December to March, from 18,900, now again back to 16,900. So 2,000 point up and 2,000 point down. I think so that is going to be the order of the day, unless this US inflation is coming to like the Fed has to indicate what they call it as a pivot. So where is the maximum point, they will be increasing the rate. So until then, it's going to be very, very volatile markets. So volatile markets, traders may be chopped off both the sides, and so it is better to be careful in trading right now when the markets are highly volatile, and markets will go up, down, but finally it may come down. So you know already that I had a bullish view in the first week of January, then later I changed. So why I changed my view, that many times I have come out with the video. So this video is also something about that. Hope you enjoyed watching this video. Thank you for watching.